get to the market, you start asking yourself, what's the meaning of the market? What's the meaning of market structure? So market, we are talking about people who are willing to buy or sell your goods and services. So when you talk about the market, we refer to people. That's the market. Same thing when you start a business. When you start a business, you're gonna have to do what we call market research. You're gonna have to research around about people who are willing to buy your goods and services. You're gonna have to know what they like and what they do not like. So, and then the next thing, we have two trends. In the market, we have two trends. We have what you call an uptrend, and then we have what you call a downtrend. So with these two trends, these trends are controlled by what we call price. So in our chart, we have the right side, which are numbers. So these numbers are price. The lower the price, and then the higher the price. And then on the downside, we have what we call dates. These are dates and months, or what you call time, to track on how people are doing those transactions, the buying and selling of goods and services. So back to market structure, we have two trends. We have the downtrend, and then we have the uptrend. So with these trends, the market moves in fractals. There is something that we call fractals. Fractals. So with fractals, the market moves. The market moves in zigzag formation. In zigzag formation. It moves in zigzag formation. So there is no way on how the market can just make a straight line and move with a straight line without making those fractals. The reason why the market creates fractals is to give investors opportunities to scale in. Scaling in, I mean to get involved in the market. That's why the market moves in fractals. That's the reason why the market moves in fractals. Fractals, we mean zigzag formation. And also the reason why the market moves in fractals is to give investors an opportunity to scale in. So getting back to market structure, two types of trends. So we have what you call an uptrend. An uptrend is when the market creates what we call highs, lows, higher highs, lows, higher highs, and lows. So we have a low here, we have a high, we have a low, and then another high, and then we have a low, or a higher low. People, they call it a higher low, but I just refer it as a low, and then another low here. So with the uptrend, this chart here, or this zigzag movement formation, it's price. We call it price, because the reason why we call it price is because this line, it shows us on how the market moves. And with these lines, we can track it to the far right where we see price. That's why we call this line price. So the market in an uptrend, it moves up. The reason why it moves up in a zigzag formation because the price is rising. So we have characteristics of an uptrend. So the first characteristic is that price is going up. Price is going up. And then the second one is that the reason why the market moves up is because price is cheap. Price is cheap. So the reason why I say the market moves up because price is cheap is because when price is cheap, when something is cheap, a lot of people are gonna be willing to buy that certain item because it's cheap. Remember, I said the market refers to people. So when price is cheap, a lot of people are gonna get involved in the market. Therefore, the chart is gonna rise up. The reason why the price is rising up is to try and balance the supply of that good and the demand of that good. So another one is that when price in the forex market, when price goes up, we buy. The reason why we buy, it takes us back to that characteristic whereby we say price is cheap. So these are the three characteristics that we have lastly, I forgot the last one. So the last one is that in an uptrend, the market breaks highs and respect lows. The market breaks highs. The market breaks highs and respect lows. Simple. Price is cheap. The market price goes up, and then when the price goes up, we buy. Why do we buy? We buy because price is cheap. Everything that is cheap, we buy it. And everything which is expensive, we do not buy it, we sell it. We sell everything that is expensive, and then we buy everything that is cheap. So with an uptrend, the market breaks highs and respect lows. The reason why we break highs, remember I said the market moves in a zigzag formation or fractals. So when the market breaks, when the market goes in fractals, it's supposed to create a high, break it, create a new high, break it, create another one, over and over and over. So that's all about an uptrend. So we're gonna move to what we call a downtrend. So with a downtrend, we're gonna have vice versa characteristics. So here, the market price goes down. The price goes down. The reason why price goes down here is because the price is expensive. When price is expensive, there will be low market. When I say low market, I mean there will be no people who are willing to buy expensive things, of which a lot of people are not gonna be able to buy those services or buy those goods because they are expensive. So what we are going to do is that the price is gonna go down to try and attract a lot of investors who do not have money to be able to afford that certain item. So the next one is that price is expensive. Like I said, price is expensive. And then the next one is that the market price, it goes down. And when the market price goes down, what do? We sell. We sell because that thing is expensive. When the price goes down, we sell. And then lastly, we're gonna have the market breaks lows and respect highs. It's vice versa. Respect highs. So the price goes down in a downtrend. Price is also expensive. The reason why price is expensive and the reason why price goes down is because it's expensive. No one is willing to buy. So people who are willing to buy, they only buy cheap things. Remember I said in an uptrend we buy because something is cheap. So what do? We have to push the price down so that it can be cheap to accommodate investors to buy again, to push the market to the upside. So that's what happens with the market. So I said the market here in a downtrend, it breaks lows and respect highs. So this is what I mean when I say it breaks lows and respect highs. This is a low, another low, another one, and the last low. So what the market does is that it creates a high, it then creates a low, it creates a high, and then another low here. It then creates the last high, the lower high, and then we create the lower low. They call it the lower low because it's lower than this low here. And then we have a high, a lower high, because it's lower than this previous high. And then we have another lower high. And then we have another created lower low. So that's how it happens. And then lastly, we're gonna have something that we call BOS. There is something that I call BOS. BOS is an abbreviation of break of structure. Break of structure. I normally use it to make an abbreviation for break of structure. And then I have something that I call a chalk. A chalk is a change of character. So in Setswana, a change of character we mean ha market o change selebego. Ha market o change selebego is when the market is no longer on that trend, is on a different trend. So when a change of character takes place, it takes place when the market violates the rules of the previous trend. So a chalk, I call it a change of character. A change of character. Yeah, so there are just two. I just use these two abbreviations. And then there are also the ones that they normally use, like shift on market structure change, and all those abbreviations that you can think of. But I normally use two. So with here, getting back here, remember I said the market breaks highs and respect lows. And then it respects lows. So we're gonna have a BOS there, a BOS. Remember I said a BOS is a break of market structure. Another BOS here. So I'm gonna just clone them. Yeah. So we're gonna have one here, a BOS there, and then lastly another one here. The reason why I say this is a BOS is because the market is breaking the previous high. Remember, this high was created on price 1448. On the far right, it's 1448. So the market broke this level here on 1448 to create a new price of 1492. That's why I say the market price goes up in an uptrend. It's because whenever the market creates this fractals going up, the price is also increasing. The reason why we increase price is because the items that we are buying here, they are getting limited. When they get limited, what do? We have to rise price up so that we can be able to maintain the stability of the supply and the demand. So what we basically do is that we have to be at equilibrium. The supply and the demand have to be at equilibrium. So with market structure, price has to go up when the price is cheap, because the market is increasing. The number of people who are buying that certain item, that are increasing. So price has to go up so that we can be able to regulate the limitlessness of that good, so that they do not get finished up. And then here on a downtrend, when price is already expensive, what we do? There are less number of people who are buying that certain item. What we do is that we reduce price, or we take it down because it's expensive, to try and accommodate people who do not have money to be able to afford that certain item. So I'm gonna make down a few breakdown, a market structure breakdown, so that you guys can be able to get a gist of what's happening in the market. So I'm gonna start with the downtrend, because price will be expensive. Let's say price is expensive. So we're gonna have something like this. The market will be going down, and then suddenly changes character, and then it breaks the previous low high, and then this happens. Price goes back to the cheaper level, and then we break the previous high. Yes. So here, if you can be able to see this thing, we have one trend. So we have what we call an uptrend. This is an uptrend. We broke a high here, and then we took another high right here. But we have what we call minor structures. So with minor structures, we're just gonna have to do this so that you can be able to see that this is just one trend, and then it has minor structures in it. So it's just a major trend with minor structures. Yeah. So what basically happens is that here the market was on a downtrend. The market was on a downtrend. It was breaking lows and respecting highs. And then all of a sudden, what do? We change character. Market will change as a level. We change character, the market changes direction to an upside, because it has violated the rule whereby we say in a downtrend we respect highs and break lows. But here we violated a high, meaning that we are changing direction because we violated another rule of a previous trend. So what happens is that the market breaks highs. It starts to break highs, and then all of a sudden we see the market creating the last high and failing to break it. Remember, I said when the market fails to break a high, that means that we are on a downtrend, because in a downtrend we respect highs. So meaning that we respected this high, and then we broke this low here. So we are now on a downtrend. We are now on a downtrend. And then the market created the last low. And then it failed. This low here, it failed to break this low, but then instead we disrespected a high. So that means that we are now on a new trend. We are changing character. So the market changed character, and then we continue breaking structures of a new trend. We break highs. And then lastly, the market failed to break this high, and then it respected it. So what we do is that the market is now changing character. We break structures to the downside, and then we see the market violates this low by not breaking it. So we are now on a new trend. We are now on a new trend. So what we do is that I'm just gonna mark the break of structures, BOS, and I'm just gonna mark it BOS. So to make this quick, let me just clone it so that we can be a bit quicker. And then a BOS there, another BOS, another one right there, another one there, and then lastly here, and then another one here, and then right there. Let me just continue cloning. We're gonna have a BOS here, another BOS, another break of structure. Let me just clone. Okay, good. So we have here, and then we have another one here, break of structure, another break of structure, another one right there, and then last of the trend, and then another one here, another one right there, and then over here, yeah, and then we have what we call a chop, whereby the market changes character. Market or change it, selebego. So we call it a chop. Selebego, it's a market out change selebego, it's a Setswana name. So I'm a trader from Botswana. That's why I just use that word so that Botswana can be able to understand, and also some few South Africans. So yeah, that's it. That's it with market structure. So another chop, it took place right here. So remember, this is an uptrend. It's an uptrend, but we are having minor structures or macro structures in one trend. So with market structure, what happens is that a trend, what happens in a lower time frame, it also takes place in a bigger time frame. Yes. So whatever these minor structures are doing, also in a bigger time frame, it can also happen. So that's one thing about market structure. So thank you for today's lesson. I'll just break here. So good luck on your trading. I wish you the best trading success. Thank you for watching this episode of Market